Hey squad, for those of you that don't know me, my name's Rob. I'm going to be your instructor today, and we're going to go over a few things. The end goal here is to kind of give you a better understanding of Andrews Median Lines. For some of you, it may be called Andrews Pitchforks. Andrews never really did use the term pitchfork. That was something that kind of came as a nickname afterwards. And so you'll hear the words median lines used a lot, which is it's the same thing because that goes back towards the root. Before we can just dive into median lines, we got to get into how they are built, where they come from, and how we can find them. So what we're going to do is we're going to get into a few things here. We're going to start off. I'm going to explain to you what mountains and valleys are, and the way that mountains and valleys can start to set up your charts, how you can use them for trade entries, and also for areas that you can expect median lines to form and or starting to form. We're going to get into finding these swings. I'm going to show you ways that you can find which swings are what. There are different types of swings. They get into minors, they get into majors. I'm going to show you how the market likes to push, contract, then expand. We're going to get into the ABC points, which are where we're going to draw our median lines from, and we're going to actually start drawing Andrews median lines. So let's go ahead and get started. Let me go ahead and set up the screen over here. Okay. So mountain valleys. To kind of get an idea of what a mountain and valley is, let me just try to draw one here. So this would represent a mountain. Basically, you have the base of the mountain, which would be this area here. And so this is a mountain, and this is the base of a mountain. What this is trying to symbolize is price comes up and then returns back to the base. Now for a valley, it's really the same thing, however it's just the opposite. Alright, so we're going to go ahead and draw the base, and there's your base of a valley. So you got your base of the mountain, and then you got your valley here. Same thing, it's just the opposite. Price comes down, and then price comes back, returns in, and fills in that valley. So looking on the charts, you're always looking for mountains and valleys to be filled. Now, this doesn't always happen in a straight line. Sometimes a mountain can be angled. For instance, it could look like this. And it's just simply the base of the mountain is at an angle. All right. Let me go ahead and set this up. Okay. So that's just really the basics of mountains and valleys. I'll try to show some of these on charts and how we can utilize them. Let's see. Okay. Now let's get into finding the swings. So market tends to move up. Now this is where I needed that setting. Okay. So the market pushes up. Okay. And the markets tend to expand, and then the markets tend to move up again. When looking for swings, swings have a tendency of being the same size. Just put this here. Okay. Swings have a tendency of being the same size, and these are things that you need to look into. And when you have two types of swings, you have minor swings and major swings. The minor swings are going to be smaller than the major swings. I hope that should make sense to everybody. One way to tell for your swings are obviously the ups and downs that are in the market. Start looking for them. You got your minor swings, and the swings are normally going to be somewhat close to the same size. What I like to do is if you draw a line from the top of your swing to the bottom of your swing, then you can move that trend line around and kind of gauge the size of the swing. For example, right here, if I took this line, I could sit there and put it next to each swing and kind of gauge and be like, yep, about the same size, bring it up here, it's not the same size. So this is going to be a different swing, and then I will look for swings that are the same size. For example, this one here, that would be my major swing. This is about the same size, so I'm going to call that also my major swing. Now, when your sizes start to get proportional, say one size starts to get bigger or something smaller, they can kind of give you a clue that things are still pushing, or maybe you're getting ready to have an expansion. And that's something that's pretty powerful, knowing that you can predict an expansion coming. Doesn't mean the market's turning, just gives you an idea of saying, hey, there's an expansion coming, and I'm going to look to possibly get long based off of that expansion. First thing you want to do is you want to start marking your swings. For minor swings, just pick a color, draw a line on the top and the bottom. I'm going to use this Easter pink color, and then I'm going to start marking my swings. Okay. So I'm going to get that to go away. Yeah. Okay. So we start marking our swings, and then you want to mark your majors. Say I make that yellow. And to know that this was a major swing, you simply just take a trend line, draw it from top to bottom, and just gauge it, see if it's roughly the same size. And that's really how you mark your swings here. Now for your ABC points, it's really just 3 points, and you can use any 3 points. For example, let's see. All right, so we have an A, a B, and a C. I just picked 3 points, marked them. That's an ABC there. Or I can simply have had it where this is you got your A, your B, and your C. Okay, so you A, B, C. Any 3 points. And it doesn't really matter where you start that point. 3 points is 3 points. And the pendulum, which is where you don't start in the bottom, but you kind of start, at the top of before a correction. Those are actually very good points as well. And I'll show you some examples of those. Let me go ahead and clear that. Next, we're going to kind of get into the Andrews median line. So this is where mountains and valleys also comes in. Some of you heard me use the word sine wave. If you look at a mountain and a valley, it kind of does make a sine wave. Just go back to the example. So you got your mountain. And then if you have a valley, there you go. See how it kind of makes a sine wave? So if you look at the Andrews median line or the Andrews pitchfork, the sine wave really does come into play. And if you can start seeing price do these sine waves, it kind of makes it really easy for you to spot out areas where the pitchfork definitely hit its median lines. If I were to draw one, you can see where the sine wave created this median line and price came up and then ended up meeting right back in the middle. And that's really what Andrews median line is. It's a type of geometry that occurs. And if you take any chart and start lining things up, you're going to find trend lines that match all over the place. And Andrews median lines is really just a method of bringing things back to the median from any 3 points. Andrews also states that 80% of the time price will come back and meet a median line. And that's a pretty powerful thing, knowing that you have an 80% chance that price is going to get to the median line. The hard part is really trying to find the median line that's going to work, and it's going to come back 80% of the time, because you may think you have one, but price keeps going, and it's actually a much larger median line that's being brought out. when you thought it was going to turn, it didn't. And there are ways to bring up your probabilities of trying to trade and use median lines in your favor. So let's go ahead and look at a chart. Bring up some candlesticks here. Okay. And the most important thing here to do is really to start mapping out your swings. See that we have a swing here. Now, you can see where this one's about the same size. So we know that's the same swing. This one here, kind of close. So you can go ahead and mark your swings. Got one here. Okay. Go ahead and mark this one. I don't know why these are sticking. There it goes. All right, so now we have swings. And then we also have price coming up, which this is much larger than what these are. So I'm going to go ahead and call this a major. I'm just going to make this yellow. And price is coming up. Now this doesn't mean it's a swing. I'm just marking it to say, hey, this is different. Now you can take any 3 points and put in a median line. So this could be A, B, C, or this could be A, B, C. Any 3 points from your swings can be a median line. Take the median line tool. You know what? Before we get into median lines, before I draw them, I should just go ahead and show you that there are 2 types. Let me bring this up. So if you have A point, B point, C point, this is your normal Andrews fork. Okay? Now there's another one that's called a modified shift. Basically what it is the base here is moved over 50% and then it's moved up or down 50% based on which way you're drawing. In reality, all it really does is draw a channel. If I were to draw a channel, here's a channel, okay? So if I were to draw a channel, here's my A, my B, and my C. A modified shift is really just going to be a channel. If I change this over to a modified shift, hit apply, see, it's just a channel, and then it's got the midpoint. So that's a modified shift. How is it different? Well, a lot of times we can start drawing modified shifts and do a channel before you even have your 3rd point, which makes things a lot easier when you don't have all your points and you want to draw a channel. And so a lot of times we can get in channels a little bit in advance using the modified shift. Okay. So we find 3 points. Get your A, B, and C. All right. Now, price did start following this median line, but then it started to break out, and then it came back down. Well, what can we do with this? Well, we can make a modified shift to see if it fits any better. All right, which this did contain price a little bit better than what we had before. So if one looks real sloppy, try switching to another. And just by using these, you can start making trade ideas. When price gets towards the top, you can start looking to sell. You can look for structure to change, for it to break out, or you can just simply watch it and see if price does anything. So let's switch points. Let's make this our A point here. A, B, and C. So we have our A, B, C. And with this, price did come down, came up, immediately came up, it touched the median line, it found resistance, and then this dropped. When price broke out, price did come back and touch. We can also expand this to an extra median line level down to see if price came down all the way here. It did not, so this would not have worked. Another thing that Andrews has is something called a sliding parallel. So when something goes out or maybe even falls short inside of a median line, what you do is you duplicate the same trend angle and you can actually slide that out, and you can use that at a future reference point. So by taking a trend line and me drawing it on one of the median lines, I can then slide this out, make it a parallel, put it where price came down, and that's a sliding parallel. And you'll find that many times price will come out of the sliding parallel, come back, and then now use the sliding parallel as a place of support or resistance. For example, right here, price came up, broke the median line just a little bit, put a sliding parallel on it. Price did come back, touch it. It did find a little bit of resistance, came down, and then finally broke through it. This may not be the best example, but that's just how you use sliding parallels. Right here, you can also see the sine wave. Just to draw it from scratch. There you go. And you see how the sine wave kind of came into play right here? That actually drew this median line. And we can keep going down, finding more points. A, B, and C. Price came back, broke through the median line, tested it, and then broke out. Got an A, B, and C right here. Price came up, touched the median line, dropped, broke through, came up, started testing the top, found resistance, came down. All right, so you kind of got the idea. ABC points. You can use any ABC points that work. If one median line doesn't work, try using another one. Try using the modified shift to see if it works. Let's put some of this into practice. I'm not going to sit here and draw every swing. Let me go ahead and just take these away. Okay. Well, let's get into mountains and valleys real quick, just to try to show these on your chart. When looking for mountains and valleys, I really like to look for what they call hidden gaps, which are these wide range bars. They're basically bars that have broken out. The market tends to like to push, contract, and then expand. This right here would be a form of pushing. Push, push. You can actually see the sellers. Push, 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 push. Sell, 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 sell. Expand. Sell, 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 sell. Expand. And then sell. Okay? Pushing and then extracting. And this happens on all time frames. So some expansions are going to be a lot bigger than others. So let's do the right side of the chart. See, we have a wide range bar right here. What you want to look at is just look at who got whooshed or who got zoomed, right? And then usually the bottom third of a wide range bar, this is the area where a lot of the liquidity was, is what pushed through. But sometimes when you have shape like this, you kind of got to get the bigger picture of who all got zoomed or who all got stopped. And this area here, it was more or less around this area here. You can also see where price kind of came back and pulled back as well. And I'm going to call this, you know, basically the base of the mountain. Or this could be the base of the mountain down here at the bottom. But basically you have a mountain coming up. And I'm just going to be conservative. I'm going to go with this area right here where it got pushed. And I'm going to look for this mountain to get filled for price to come back at a later time. If I ever have a median line around this area, this is a high potential area for a median line and an area where a wide range bar was, also known as a hidden gap, where price rolled over And those two things combined can really make a great area for an entry. If I take 3 swing points, I'm just going to pick 3. Let's try A, B, and we'll call this C. Okay. Now we have a median line coming down here. Let's see what this one looks like. A, B, and C. So there's a second one. So if price came down here, this looks like a great area that could create some support. If this lower median line was to get tested again, you know, this would be a great area for the base of the mountain to get filled. Somewhere down here, just the lower base. But if you're not really sure, this is a good time to kind of watch and observe what price is going to do. All right. Also, we can go through and see if any of these will actually look better. Right here, modified skiff. Could have used this as a breakout out of the modified for the price to move up. Well, let's just go ahead and leave this where it is. See what price did. Price came down. Okay, so we can see where price came down, respected this median line. Price did respect the top median line from this ABC point over here. I'm gonna go ahead and get rid of this one. So this area here, price came down, bounced around, and then it broke through. Now this is a good time to just go ahead and start watching to see what price is going to do. Okay, so price is hugging the median line. Price is coming up. I'm going to go and stop there. I'm going to do an ABC. And right now, this would be trying to say we're calling the bottom. You can't call the bottom with Andrews Forks. You got to kind of watch price. Let price tell you what it's going to do. Okay, that's a little better. Okay, let's discover price. Let's see what price is going to do. Price is coming up. Ooh, right here. Something changed. We found the base here. We broke to the upside. Go ahead and mark this area. We got a nice little wide range bar area here. Let's go ahead and move that over. The reason why I picked this location, because this is an area that clearly price rolled over, price flipped. This was the area here, and then we just pushed right through it. All right. So we're going to keep an eye on price, see what happens. Price is still coming up. Let's see if we can get a better, trying to see if we can get a better point to contain that. I don't really see anything just yet. We'll keep going. Right here. So price came down. So we're clearly in, price is coming up on an uptrend. This fork area is being respected. This is a great area to enter a trade location. You can have stops somewhere down here or put it down here below the swing low. Just an idea. But this would be capturing the expansion, filling the mountain and area to get long. 3 things can happen here. Price can reverse, continually to head up. Price can kind of creep through, then turn, head back up. Or price can gap down, creating a rollover, kind of what happened over here. Pull back, and then continually selling off. So we're going to keep going. Is price going to hold? Price looks like it's holding. Let's go ahead and put another fork. Get A, B, C. I'm going to modify shift it just because it's closer to price right now. See how that reacts. Looks like price is hovering around the median line. So we're hovering around the median line. Boom, price breaks up. Testing the top. So what do we have here? So we're testing the top. What's an area for it to roll over? You can't really buy at this level. It's too high. We've already done all this. Prices push, 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 push. And inside here, you can see the push, contraction, push, contraction, push. Pretty soon here, we're going to need an expansion. Prices push, they contract, and they expand. Got a wide range bar here. Let's keep an eye on this area here to see if this could be possibly a buying area or a rollover, or a spot to roll over and possibly get a short in. Price is going up, going up. Buyers, buyers, buyers. Look at that. You can just feel it. Buy, 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 buy. Ooh, something happened. What happened? Look at that little wide range bar. Price for price flipped over. If I were to sell here, I would look for price to come back. This is how I trade. Look for these wide range bars. See if price comes back. If it does not come back, it's okay. It happens. You don't get every trade. So price just dropped. Drops, drops, drops. Sell, 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 sell. Price comes up right here. Look at this. Touch this median line. Look at this area that we already marked on the chart. Let's go ahead and bring this over. It's coming right back into this wide range bar, this hidden gap right here. Also, median lines right here. Great place to put a sell. Let's predict price heading this way. See what happens. Market goes, keeps testing the area. A little bit of buyers, but nothing with momentum. Boom, price drops. Testing the lower median line, and there we go. Broke through. Let's take this level here. Go ahead and bring it over. This is the area here that rolled over. I'm going to bring this down some, because you can see where price is more contained right here. Okay. Price goes, goes, goes. And then hits. It's about to hit here. Also, look at this. A, B, C. Got our 3 points here. If I were to modified shift this, price is contained. Price came down, touched the top of the median line, came down here, hit the median line of the downsloping fork, contracted, expanded, and now it's currently going sideways here, doing another contraction phase. Go ahead and mark this area. Price comes up, hits that level, boom, top of the median line, came down, tested this area again, came up, hit the box, now it dropped again, found support off the median line, got an A, B, and C right here. There you go. Hit play. Price touches the lower median line, comes up, starts to test. And that's it. Now we're at current price. So that's really it. I mean, this is kind of it in the this is the rough overview. I didn't really touch every little thing. I didn't really touch all the rules about median lines. One thing I can touch that Andrews did talk about in his median line books. So here's a median line. He says about an 80% probability that price will come up and touch the median line. Price comes up, touches the median line, the one in the middle. Price can do a few things here. Price can either turn like this, okay? Or price will actually gap through. And if price gaps through, there is a very high probability, doesn't happen every time, but a very high probability that price will come back and test the median line. Knowing that there is a high probability for price touching that median line, it is better to enter at the median line than chase price. All right, it's better to enter at the median line than chase price. You will get a much higher reward taking that entry. Also, another thing that was stated, there is another rule. If price misses the median line and then breaks out to the downside, the move going down will be longer than the price that missed the median line. All right, so this move coming down will be excessively longer. It will be longer than the price going up. For example, like that. And that's a powerful thing too. What Andrews also did to try to, he would call these signal lines, but he would have another line that was down here that he would use kind of to make sure that price just didn't break out a little bit and then turn and come back up. If it crossed that signal line, then this move was underway. So throwing that out there. All right. And don't be afraid to try different things. I'm trying to find a good one here. I mean, 3 points. I mean, a lot could tell you off 3 points, and you'd be surprised where you grab them. What price does? Any 3 points. Find something that works. And it really doesn't matter where they come from. Everyone can have different median line sets, and it's all how you trade them. It's going to capture the market and give you some type of structure that you could trade off of. All right. Well, I hope you guys enjoyed the video. It's kind of a rough video, I know, but it kind of explains a little bit what I'm doing. All right. I look forward to your comments. Take care. Bye.